This is the perfect trade. Okay, let me rewind a little bit first. What if I told you there was a way to get a perfect trade and entry every single day when it came to trading futures specifically? And then what if I told you there was a way you could trade futures and make a very good amount of money with the least amount of risk possible? If I didn't have your attention before, I should have it now. Let's get to work. Now, with this strategy, I can promise you 1 to 2 great trades a day typically. Some days you're going to get terrible action. That's just a reality of it. But I can promise you 1 to 2 typically great trades a day from the strategy. That's the goal. Now, one of the biggest problems I see from people, and you might understand this, is you get in these areas or just really terrible ranges like this, right? And struggling to know when you're getting the breakout or the breakdown. And that's really what the strategy kind of helps you understand and helps you accomplish and do. So that's what we're going to understand. The second part here is understanding I'm primarily using this for futures trading, like the NASDAQ, ES, maybe even some commodities, but primarily the NASDAQ and ES, S&P futures. Why? Because again, I'm focused on scalping when it comes to this, right? Intraday setups to give me the clear breakout or the breakdown, make my money and be done. Futures provide the best opportunity for that. And they also go into the area of leverage and scalping. So if you're able to copy trade multiple accounts and prop firms. Now for me, who I'm using, giving you a visual, I use Top One. The link is down below. And why I'm really about these guys right now. Number one, they're funded straight to funded account, instant sim funded. I made a video on them last week going over why I like them. But again, it's the best deal in the market. $400 for 150K. You can immediately do a 5K withdrawal within the first 10 trading days. Again, so time straight, it's 15K. It just makes so much sense. And then your max trailing drawdown is 6K. The best deal out there in the game. On top of that, you can use them with Project X, which is my favorite future trading platform. And this is a demo account that they actually give you when you sign up so you can learn to use it. And so you can go through all the risk features, which again is my favorite thing here. You can go into settings, set max wins, max losses. You can lock yourself out of your account so you can hold yourself accountable, control those emotions, etc. I'm not trying to sell you on the prop firm, but who I use so you guys know. And I want you guys to be aware of that. So those are a few things to understand. The next part here too is understanding that you still have to combine it with understanding when you're getting the breakout, using volume, etc., using your other indicators. And we'll go into that here in a second. But it is going to give you that 1 to 2 great setups a day. That's the main point here. The last thing I want to say as well is, again, if you're trying to see everything we're doing, everything we're trading, the Discord link is down below. You can see all of our wins, losses, etc. You can see every day for futures. We give you the setups. We give you the top stocks that we're watching, where our levels are at, what to expect, the technicals on the bigger setups as well as you're breaking up or breaking down, so you never miss a single beat, right? So again, that's down there below. But what I'm going to show you right now is getting directly into the strategy and actually setting up through the indicator as well. Now, this video is a little bit different compared to my other ones. We're jumping right into the strategy because I think it's important that we understand exactly what we're doing and why we're doing it. It's also important to understand everything that I do on this channel in regards to my trading is all about being repeatable. I want that process to be something that I can do over and over and over again. And if it isn't broke, you don't fix it. So while this strategy is a little bit different than some of the other stuff I do on the channel, it integrates perfectly with what we're already doing, which is supply and demand and key levels, and then using volume to tell you when to get in and out of those trades as well. And then it's also narrowing down when we should not be trading, when those big fat ranges are really decimating and taking us out of the profits as well. Let's get to work. Okay, so for today's video, it's going to be the opening range breakout. And this is what's really going to change things for pretty much everyone. Again, when you apply this to your trading, you're going to notice things really start to change. And luckily for most people now, there's indicators out there built directly for this. So when you go into your indicators, type in ORB. And I've made smaller videos over this, but I think this is going to be the one that really hopefully gives you guys more insight. So it'll automatically adjust, but you have to go in here and go for your first New York session opening range. So for me, I'm Central Time, so it's going to be 8:30. Important to understand that. 8:30 is the first when it opens up until 8:45. Let's go to 8:45 right there. Okay, that is my opening range. It will automatically set it. It looks simple, but I promise it gets a little bit complicated because you start to overthink some of the process as well. And so all it really does in simple terms here is it marks out for the first 15 minutes of market open, your high and your low, right? What is that first 15-minute range that you develop? And what's funny here is this is futures. This is literally today, April 9th. We'll go look back at yesterday as well. But look what happens. You sit in this range from 8:40 all the way until noon. You sit inside this range. It's not the cleanest action, but it's back and forth. You can see you've pushed down the lows, you bounce off that. And what's funny is you make higher lows off of that level for the remainder of the day until you end up actually breaking out. And then what happens here is you eventually get the break and the retest, clear mount on the 5-minute, and then you end up going parabolic. Now, there was news, so I don't just want to see this as a one-time fit, but it's important that you understand the setup and what's happening. Now, ultimately, what you're looking for from this is the breakout, because you want to make that money on your breakout with continuation, with follow-through. That's where you make all your money when it comes to trading and when it comes to the strategy, because you're getting that clear answer of where those breakout points are from your top to your bottom. Now, I still apply my key levels, my supply and demand. I still look at those. But this gives you a great visual of momentum setting up, because sometimes you might come into your key level and it looks really strong and you're trying to break out, but you don't really know what's like really kind of at there for you, right? So really quickly, you can see here we had a key level at 17.57. And so this morning you were kind of hitting it, but you were rejecting. So you were rejecting the top of your range and our key level. Double confirmation to kind of short back in that range if you wanted to. But then what gets interesting here is on the 5-minute, you start to get above and kind of wick through and mount that level. So although you're not really mounting the key level, you're mounting your opening range, which was a big signal to start going long. So again, it's going to work directly with your strategy, directly with what you're already using, and it's going to line up too typically with volume for breakouts in those directions as well, which is something that's very important to understand. So for instance, as we look here, when you're getting that breakout here, look at your increase of volume as you're popping out of this overall range. It definitely increases to the buy side, even before you get your big pop. So important to understand that. And you'll notice when you go back, you can use this every single day. You'll go back to the previous range here. Look what happens. This is, I believe, Tuesday, March 8th. Yes, or April 8th. You get a break to the upside, break back to the downside. You reset, you mount below, and break down. And so you actually had two good setups. Early session to the upside, back to the downside. And again, I use those right in tandem with my key levels, what I'm already doing in the market. So I had a massive low up there. You reject back down. You come back in. You reject your key level. You break below the opening bottom of that range, and you shoot down to your next levels. So again, it's about using those in tandem again and again and again. I can go back and forth through this, but it's important we understand what's happening there first. Now, also too, this is the 15-minute range, so it's important that we understand that. I'm not using a different time zone, a 5-minute, 10-minute, 30-minute, 1 hour. It's a 15-minute opening range. Before we go too much further into the strategy, I think it's important that I break something down. There's 5-minute opening ranges, 10 minutes, 15 minutes, 30 minutes. But it's important to understand, this is what works for me. I went back, I back tested it, I looked at what was working with futures and how I can make the most money off of this. And this, again, was something that was repeatable for me. That first 15 minutes told me a lot of what I needed to know. And a few things that really go into the market with me is understanding when you're getting the most volume in that trading session. And it's typically that first and that last 15 minutes of trading. So it really integrates perfectly. Now, am I here to say that the 30-minute doesn't work or the 1 hour? I'm not here to talk about those. But what I know is repeatable, what I know is working consistently for me is the 15-minute opening range. And that's why I'm so focused on it. Because again, I like something that's working. I like something that I don't need to tweak. I like something that's, again, that I look at, I know is working as fact. I can go back and back test, and I can repeat that process. And statistically for me, it's the most profitable. Again, before we go into more examples and breaking that down, the biggest thing that I'm looking for, and I want to just clarify so we know exactly what we're looking for. One of the biggest things that I always say is I'm looking for reactions in the market. I'm not looking to predict. I'm not looking to say, okay, well, this should happen, we should break straight out, and we should get the key breakout. I want to be the first one in. I'm scalping. I'm intraday trading. I'm taking what the market's giving me, right? I'm not the wizard who just predicts everything that's going to happen. That's cool, but that's not what I'm trying to do. And that's probably not what you're trying to do. That's not realistic, per se. So again, what I'm always trying to do, giving you an example here, is I'm always... Let's get out of this so you can just see real quick. I'm trying to see how we react when we get out of these ranges, right? And what I mean by that is are we getting clear upside or clear downside? So when we zoom in here and we get a better look, so let's just draw this out again right there, as you can see. Zoom in a little bit more. I want to see a break and a retest and continuation. Now, why do I want to see action like that, right? Because that action typically tells me what I want to know. Was that top of that level important? Was it significant? So when we break out, finally, and then when we get that retest, well, this retest tells us the most important information. Number one, was it a key level in the first place when we broke out? Was it a range, etc.? Was I looking at the right thing? And then that retest on top of it says, okay, not only was it an important level, but now we flipped that level, meaning there was previously sellers there, and now the buyers have stepped in there to claim that level. And now they're the ones propelling us into our next spot, to our next target, etc. And the same thing goes for the downside, from sellers and buyers inverted. So it's important to understand why and what we're looking for. Again, if you're in the game of just going long on, and I like bull flags, hitting triangles, etc. I like those continuation patterns. But if you're in the business of going long before the breakout, before confirmation, you're creating more risk. You're creating that opportunity to lose. And I'm not going to say that you're going to win every trade here. You're going to have bad days. You will. Promise. I do all the time. Okay? That's going to happen. But the part to understand is that you can reduce the likelihood of having those bad sessions, those bad days, by simply waiting for confirmation, waiting to check those things off your box for success, right? That's the important part here, okay? And it's very important that you stay in line with that. And another thing that I'm doing here, going back into futures, is something you're really able to do is going into like Project X, for instance, right? And you're able to automatically set your risk parameters. So even if when you go into that trade and you're like, okay, well, this is my clear set, I'm looking to make, and this is, I just changed this up for an example in the last video, but I'm looking to make $350 for the trade, and I'm looking to risk $200, right? If I'm trading micros, I might raise it up if I'm trading minis, right? But it's important that you have those set. So when you go into those trades, you automatically know, I'm looking for that retest, that reclaim. If I get wicked out, I get wicked out. It is what it is. But again, you're focused on the heart and the strategy of that trade being repeatable, right? Knowing that you did your due diligence, knowing that the setup you did fits the criteria, checks those boxes, right? And you're not just gambling as you're doing it over and over and over. You're setting criteria, you have a plan, and you're executing said plan. So it was really important that I explain like what you're looking for as well. And I wanted to explain what I'm looking for before I go into examples from this week and the previous week, because I think it's important that we kind of break down the logic beforehand, and then we kind of start going a little bit faster pace and breaking that down as well of different trade examples. And one of the big questions I might get in this is, can I apply this to equities like stocks specifically? I don't really like that personally, because if you know the direction in which a future is going, like the NASDAQ and the S&P 500, then you kind of have the answer that you need in regards to that stock. Because if the NASDAQ is moving bullishly out of its range to the upside, then I know that NVIDIA and Apple are probably going to move and follow that direction. Because again, futures kind of play the core of the market. But then again, too, if you're scalping in the market as well, and you're probably just focused on futures as it is, because as we go into prop firms and things like that, that's kind of like that profitable measure and that thing of where you can really scale things. So either way, that's the main focus for me. Okay, the last thing we're gonna do is go over more examples, give you better ideas of what to be looking for. Now, a lot of my trading for futures is on the 1 minute. I'm gonna tell you right now. But I do think with confirmation of breakouts, the 5 minute gives you the most information. Because again, like we'll use this one as an example here. And this is today's. If you look at the 1 minute here, you had a few holds. You could even argue that you tried to hold. I mean, you really didn't get a hold on either one in this morning. But you can see here that you had like a hold here, but you kind of broke back up, then you kind of lost it. And it wasn't really that strong. But when you go to the 5 minute, it gives you exact answers. You know what I mean? And that's what we really like to see. You see strong wicks, strong holds above. Now, the problem here is as of recently, we've been getting a lot of volatility, okay? So, for instance, if you try to get in there, you have almost a 100-point candle of the downside. Typically, that's not going to happen. Like if I go back, rewind a month, that doesn't happen, like ever. That volatility isn't really there. So it's important to understand that. So the 1 minute is more of where I like to get that confirmation, what I like to see. But again, the 5 minute gives you more exact confirmation because again, you want a more of a higher time frame for that type of look of what you're trying to see. And so you could always wait for a break back above that level. But again, what I'm looking for, giving you a visual. And I want to keep going back so you can see. Now, if I go back here, and again, this is why I say you have to use it in combination with what else you're looking at in the market, right? If I'm blindly going into it, just looking at 1, 2, 3 things, right? Just looking at the indicator, for instance, just looking at the one setup, I might get deceived, right? So if I come in here and then I include my key levels, for instance, and again, these levels are all inside my Discord, on Twitter, on YouTube. So again, I try to keep those always there for you. I'm live every single day trading in Discord as well. You can see us on WAP. But again, you break down below your opening range, you break back up, but look at where you reject, right? And if you go like to the one, you'll get a better example of it as well. But you can see you rejected that key level, you break down, and then you get reconfirmation back below there again. So you get two major opportunities to really get into that trade. And that's the opportunity that was at hand there. So again, you'll see this happen time and time again. And then I even mentioned back here, you get that break right here on the 5, a break, the retest, and then you push up another 200, 150 points. So again, it's all about just watching that retest and seeing that momentum. Now, again, as we're going through examples and execution, this again is just how I'm integrating it. You can work this into your strategy if you're using fair value gaps and whatever else it may be out there for you. I don't use those, so again, this is what's working for me. But something I can tell you with this strategy is that it's integrated a lot with other strategies that I've seen and a lot of my friends that are in the trading space as well. So again, you need to understand that maybe something I'm doing might be a little bit different than what you're doing, but what I recommend doing is try to just slowly integrate it and just see how it's working for you. If you have a strategy that's almost perfect and you don't really want to change things up and you're making a lot of money, I wouldn't focus on adding too many things. But if you're struggling to get some of those opening ranges, if you're struggling to identify when you're breaking out, I think this is what really kind of can change the game for you. But again, don't feel like you have to over add indicators. You have to over add, too much overthinking to your strategy, right? Because that's usually where traders go wrong and they start to really lose money. Now, the other thing that you can do here, and I can use this as an example, right? You're using a combination of targets of why you're looking there, right? So 1836, this was a big level. Now, why was this a big level? I go to the 1 hour. This 1836 spot, right? Let me zoom out. I don't know what happened. Just lost everything on my chart. But you can see, well, look what happens. You come into that 1836 from that opening range, and it was your previous high from the day before. So you're using those previous levels in conjunction with it, right? So you're still getting about 150 points of upside for that specific trade, but you know why you were looking for it, everything that kind of helped it play out, and everything moving forward from it as well, right? So you might use it with VWAP, you might use it with other things, but again, it gives you more clarity. And I can even bring up VWAP here as well, and look what happens. Again, not like structuring this at all, just giving you more and more confirmation and examples. You break below that bottom of the opening range, you hold below the VWAP, bada bing, bada boom. Just more things to check off the boxes and your list of what quantifies a good downside trade or an upside trade. And again, I said something earlier in the video, the more boxes you can check off, the more reasons you can say this is a great trade. It isn't to be confirmation bias. It's to give you more understanding of this. There's a less likely chance of this trade going the opposite way. Not that the trade can't go the opposite way, but it's just less likely. So you just slowly increase that win rate, if you will, on that trade, or the likelihood of a win on that trade from, like, let's say 65% is where you start. And if you can slowly get it to 85 based off of everything that you're looking at with the trade, it becomes a better opportunity. And that doesn't mean you dump more money into it. It just means you're putting yourself in better positions overall. And something that happens with me is I find myself taking less trades because I know they're fitting less of that criteria, right? Especially when you're already winning on the day. And again, you can just keep going back and back and back. Now, this will be one of those days you don't get an example or you don't get a breakout. You just break straight up and you never really look back. You hold your VWAP, you never get back into your range, right? So you can see this is one of the outliers. So again, it's not perfect. It's not going to give you every single day. But again, like 80, 75% of the time, you're going to get those great setups again and again and again. This is another one of those examples. You have your opening range, you break down, you push back up, and you get two things what you look for. We don't got to look at the key levels. You go back into your VWAP, you reject. Number one, you're looking for downside. You break down, you retest your bottom of your opening range. Right? This is already almost 2 hours in a market open. Okay. So you have plenty of time to wait for this one, right? Retest, box number 2, rejected VWAP, rejecting your opening range. Boom, you push down. You end up pushing down just on this before you even start making another high from 18K all the way down to 17.7 and end up actually pushing down even lower. Again, over and over. And the point here is it's repeatable. It's repeatable. It's repeatable. It's repeatable. That is what you want to see. Similar case here, comes in a VWAP, actually gets above, re-loses it, gets back below, test, breaks down further. Again, you're going to be able to do it over and over and over. One of your bullish days here, you break above, you sit there on the 5-minute for literally 30 minutes on top of it, and then you eventually break back to the upside. Confirmation, holds VWAP, everything you're looking to get there. So again, it's just in tandem of having checkboxes that you're looking for, what quantifies a good trade, what quantifies a bullish bias, a bearish bias, and then using it in tandem with that. If you got anything out of this, hit the like button, helps out a lot. If you have questions, comment down below. The Twitter link is down below as well. I appreciate it. I'll see you next time. Have a good one, traders.